Well, the story of the day today has been the IT earnings. TCS is the one which is in focus after it reported healthy growth in constant currency and better than expected margin. The management told us that the order intake run rate should continue well into the next year as well. Let's hear them out. All right, we do have Rima with us. Rima, tell us a little more about the TCS earnings.
Well, thanks so much for that. So let me start with the basic numbers. So a beat on revenue, a beat on margins, and beat on profitability. So TCS's numbers surpassed expectations. The management commentary was fairly upbeat. So despite the macro situation being volatile, as of now, there has not been any business impact. The deal pipeline continues to remain fairly intact. They reiterated that Q4 FY23 margins will rise to 25%. They also said that attrition has peaked and therefore will start show signs of moderation in the second half of the year, and deal wins will be sustainable. So the deal win guidance of $7 to $9 billion stays intact, not just for this year, but even for the medium term. But what could be the potential weak spots in the earnings this time? Well, the margin gain, the margin improvement was courtesy currency. If you strip that out, the margin expansion is only 40 basis points. So that is something the analysts are talking about. Secondly, they're already talking about growth moderating in insurance and discretionary retail. When quizzed, when we quizzed the management about where else could we see pressure if the situation deteriorates, they said Europe manufacturing. They've already indicated that long-term decision-making in Europe is seeing signs of delay. Hiring numbers have also spooked the street a bit because it's come in at a 9-quarter low, and it's very often seen as a lead indicator of future demand. So is the company hiring less because they anticipate growth to moderate? Well, that is something the street is worried about. And although attrition has peaked, it's still at very high, uncomfortable, elevated levels. The last 12-month attrition number is at 21.5. Back to you.
Okay, that's on TCS. Of course, the story is done there. But Infosys is the stock to watch, right? There's a buyback proposal coming through. Rima, what more are you picking up?
Thanks so much for that. So Infosys will be considering a buyback along with its earnings on Thursday. IFL says the maximum buyback that the company can do will be 18,500 crore rupees. But they believe the buyback size will be close to 11,000 to 12,000 crore rupees. So this time, the buyback is likely to be higher than the buyback that we've seen in the last two instances. In the last two instances, that is in 2021 and 2019, the buyback size was 9,200 and 8,260. Why is it that the street is anticipating that the buyback size will be higher this time? Well, the reason is they need to meet their stated capital allocation policy. The stated capital allocation policy of Infi is that they will return 85% of their free cash flow over FY20 to FY24. Up until now, till FY22, the company's only returned 73%, which means it needs to play that catch-up, which is why the street expectation is that this time the buyback could be higher, maybe 11 to 12,000 crore rupees, as IFL pointed out. Remember, they have ample cash in their books, close to about $4.5 billion. So cash is not going to be a problem. So buyback size could be higher. Now, typically, the past buybacks tell us that it takes place at a premium, sometimes 15, sometimes 18. IFL says, according to them, the maximum expected buyback price should be 1,800 rupees per share, which is roughly a 15% premium to where the current market price is. And it could be an open market buyback like the last two. Back to you.
Okay, thanks a lot, Rima, for that. So that is on the IT stocks. But that's important. The Bank of England warns of material risk to the UK's financial stability. And we all know what's happening in the UK. The Bank of England has now intervened in the bond markets again. So just watch out for the stocks in that entire periphery. The European markets will be opening in a while from now. There could be some pressure there. Let's slip into a quick break. Sachidanand Uttekar of Trade Bulls will be joining in with some trading strategies on the other side.